So meeting a couple of people. Okay, so we're now recording. So again, welcome, and I'll hand straight over to Ian.
You want me to go?
Yeah.
Okay. Good morning, everybody. Thank you for taking the time to join me. So let's have a look at what I want to talk about today. Firstly, I want to talk about the pending and upcoming P60 and P11D issues that employers have got to make to employees. And I want to talk about the statutory obligations. So that's the obligations that you're obliged to comply with under the legislation. What you choose to do is another thing, but you must comply with the legislation. Then I want to talk about, normally at the end of a presentation, you have a big section, other. I want to do the other first of all, particularly a couple of things I want to point you to: advertising, promoting the Accounting Excellence Awards. And there's a couple of things in the employer bulletin from February and from April that I want to point you to as well, and something I became aware of this morning. So I want to point that out too. And then I think, seeing as the tax year has started, what we need to be in is we're in 2023, 24, but we're already looking at 24, 25 and onwards as well. So I want to point you to legislation that we should all be looking out for. Again, it could either come from the UK government or it could come from a member of the UK Parliament, and that's what's meant by private members' bills. So let's talk about the obligation to produce a P60. And as I said, this is the statutory obligation. There is your link to the legislation. And the legislation says that one P60 must be issued before the 1st of June. And that's what gives rise to the deadline that we've got, the 31st of May, because this one P60 must be issued before the 1st of June. And the obligation is, if the employee was employed on the 5th of April, and they don't have to be an employee, they could be a deemed employee as well. So under this off payroll rules, so they're employed or deemed to be employed on the 5th of April, 2023, and where there was an obligation under the payment that was made to deduct income tax. So that's the statutory obligation where you have to issue this P60 before the 1st of June, i.e. by the 31st of May. Couple of things to point out with regards to leavers. First of all, what do you do about a leaver that was employed and now has left? Well, post it or make it available to the last known address. So it's either postal address or email address. And from well over 10 years now, we've been allowed to issue electronic P60s, which a lot of employers do. The duplicates no longer have to be marked as duplicates, and but amended P60s, they can be issued, but must be marked replacement. And hopefully your software will do that. But the most important thing, I think, is the leavers. So that's somebody where you've got a statutory obligation to issue a P60, but by the time you come round to issue the P60, they've left. How do you fulfill your statutory obligation? That's to post it or make it available to their last known address. And then just moving on to P11Ds, specifically P11Ds to the two types of staff, current staff and former staff. There is your link to the legislation. Not expecting everybody to go to the legislation, but if you want it, that's your link. The statutory obligation, therefore, is to, under this is 85, I think, of the 2003 regulations, to issue them to a current employee. A current employee is an employee that was employed on the last day of the tax year. So that's your 5th of April. And to those current employees, you've got to issue the P11D before the 7th of July. That's what the legislation says. If it's before the 7th of July, that's what gives rise to the 6th of July deadline that we're so familiar with. If you've got a current employee, so you've got an obligation to give a P11D, but that current employee has left by the time you actually issue the P11D, again, send it to their last known address. If you do that, you've fulfilled the statutory obligation. Then you've got another type of employee. That's what's called a former employee. And a former employee is simply one that was not employed on the last day of the tax year. The employer doesn't have a statutory obligation to send the P11D to former employees. They can if they want. It's absolutely no problem to send them if they want. And under the legislation, the former employee has to request, and they've got up to 3 years to request the P11D. So that's just statutory obligations. And I think it's important to point those out. What you choose to do within your own organization, within your own bookkeeping practice, accountancy practice, payroll function is up to you, but it must be at least meet the statutory obligations. And here I come on to my miscellaneous other bits and pieces, which I usually leave right until the end, but there's quite a lot of things that I want to talk about. Firstly, I'm one of the judges at the Accounting Excellence Awards this year, specifically for the category Payroll Team of the Year. And it really is a good category because I know we are excellent anyway in what we do in payroll, but this Accounting Excellence Awards is just recognizing that excellence. So the title there, when you get the slides, will be a link to the Accounting Excellence Awards where you can actually submit an entry. And importantly, regarding the entries, it's not employer specific, sector specific, bookkeeping practice specific, any practice specific. Anybody can enter it. The only criteria or criterion is that there must be at least 2 people in the payroll team. If it's not 2 people, you actually haven't got a team. We get a lot of criteria that the entries must meet, but overridingly, we're looking for excellent and importantly, the demonstration of excellence. How you contribute to the success of your business as a whole. So how payroll plays a part in contributing towards the success. But it's the demonstration that is really important. And we have had entries in the past that have just written, we do this, we do that, we do this, which is fine, but they're not demonstrating it by testimonials, by looking at giving us KPI indicators, by giving us witness statements and all that kind of thing. And that's the most important thing. It's the demonstration of the excellence. A fellow judge said, what is the overriding important thing that employers should know? And it's read the flipping rules. I don't think he used the word flipping actually, but that is the most important thing to do. So look at what the judges are looking for and then put that down in your entry, importantly demonstrating that. As I said, testimonials, figures, the chief accountant could be saying he's absolutely wonderful, but it's the demonstration. That's what we're really looking for. So that's 11 days time, I think, the entries close. So whilst you've got a long bank holiday weekend, and there's a long bank holiday the weekend after, look at your entry for Payroll Team of the Year. Fantastic dinner. It was last year anyway. I can't remember where it is this year. I think it's a bigger venue. A fantastic dinner, great opportunity to network. Now, something that I read this morning was about the Public and Commercial Services Union, and specifically members of Her Majesty's or His Majesty's Revenue and Customs who are going on strike at their offices in Glasgow and Newcastle. Now, those are the dates of the strike. So essentially from the 10th of May to the 2nd of June, continuously, they are going on strike. The PSC union have actually said there's going to be significant problems for the employer helpline, anything to do with student loans, and where employers are registering for a PAYE scheme. And I so want to say that there's significant problems anyway, isn't there? It'll be interesting to see what happens with that strike. But just to make you aware, particularly the employer helpline, which I know many employers use, the members of the PSC union, some of whom man that helpline, will be on strike from the 10th of May to the 2nd of June, unless it's resolved. But that's the situation as it is at the moment. Over the last few months, just the last time I'm going to talk about 2024, over the last few months, I've put together a few documents. I'm just giving you links to those documents that are on the I Realise website. So you've got your basic earnings assessment, which you must perform for people in employer supported childcare. What tax code should I use for this tax year? If someone brings in a P45 from the previous tax year, in actual fact, can I use it? And you've got an important date coming up in a few weeks' time, which is the 24th of May, 24th, 25th of May. And things change if the P45 comes in or after the 24th of May, and the date, the leaving date. And a lot of the rates and allowances all consolidated into one document. So just giving you links there. I've covered it all on Brunches before, but just giving you the links. I've mentioned this before, but I do want to point you to the fact that in the employer bulletin in February, there was two things that really stood out for me. The fact that from the 6th of April, and there's the two links to the legislation there, HMRC will actually reject any P11D or P11DB, so it's new P11D or amended P11D, new P11DBs or amended P11DBs. If they come in on paper, they will actually reject them because they must be submitted electronically. Paper does not exist in regards to P11Ds and P11DBs. So the choices are commercial software or PAYE online, which is a free piece of software which allows you to do it for 500 employees. And that is going to impact the returns that you've got to make to HMRC by the 7th of June. So on or before the 7th of June, 7th of July. So they've got the deadline is the 6th of July. And then it talked about payrolling benefits. And again, I've talked about this before, but I think this is going to be my life now, payrolling benefits. No informal payrolling arrangements can carry on from the 6th of April. And an informal arrangement is somebody says, oh yeah, just stick it through the payroll. Don't worry about tenure, just stick it through the payroll. That can't continue. The employer must have registered to continue to payroll those benefits, either formally or informally. But registration, which I've spelt wrong there, closed at 10 p.m. on the 5th of April, the last day of the last tax year. So if you're thinking about payrolling benefits for next tax year, 2024-25, you should remember that the deadline for registration is 10 p.m. on the 5th of April, 2024. However, payrolling benefits is not as simple as perhaps HMRC make out. Oh, just put the annual, get the annual value, divide it by 12 and stick it through your monthly payroll. It's not as simple as that at all. We get an annual value once a year. If we're payrolling benefits, we need to get it once a month or once a week if we're doing it on a payrolling basis. Are employers set up? Do they have processes that will allow them to get their medical subscriptions once a week, once a month, their car benefit once a week, once a month? So it's not as simple as HMRC sometimes make out. And then the comment, employers that are yet to payroll. And I do honestly believe that word yet, and they've used the word legacy in the past, the legacy P11D process, implying that actually something of the past. I do think that HMRC should and will move to mandatory payrolling of benefits. Therefore, whilst we're fresh, whilst we've done tax year end, we're still finishing off 2022-23. I think one of the things that should be in payroll professionals' mind is, well, how can we payroll benefits? Do it whilst it's voluntary before it becomes mandatory. Oh, yes, and agent access as well. Yep. So agents will be able to pay register to payroll benefits for their clients, which they're not currently able to do. So I suppose that's my big thing, pointing out that paper no-go at HMRC. They will actually reject it and consider payrolling benefits. It is really a big project internally. Are we ready? Can we payroll benefits? If we can payroll benefits, I strongly suggest that you do payroll benefits before HMRC pass legislation or government passes legislation to say you must payroll benefits. Oh yes, today, exciting day. It's Tax Administration and Maintenance Day. So this all started off with a consultation, a policy paper in July 2020, which said, over the next 10 years, we are going to build a tax system that is trusted, that is modern, keeping up with the times. So we're going to simplify things, we're going to modernize it, and we're going to tackle the tax gap. Now, if you look at budget statements and autumn statements, one of the big things is about tackling the tax gap. Making sure that the revenue that should be coming in is coming in. And in November 2021, we had the first TAMD, Tax and Administration Day. And they talked about a number of things, and the things that possibly affect employers and payroll professionals, or this raising standards where an employer, an agent, a bookkeeper gives tax advice. And there have been a number of things that have come about because of that. And in 2021, they talked about increasing the effectiveness of the OTS, the Office of Tax Simplification. And yet Kwasi Kwarteng at the growth plan in September 2022 abolished the OTS. So I don't know if that was how they're going to increase the effectiveness by abolishing it, but it's now gone, the Office of Tax Simplification. So the spring budget said, well, it happened in November 2021. Do you know, we're going to do it again. We're going to bring forward a further set of announcements. And in the House of Commons, the Financial Secretary to the Treasury Victoria, oh my word, Victoria Atkins. Anyway, she wrote a statement say the TAMD in 2023 that was referred to in the budget is going to be today. So I wonder what's going to come about. What consultations, what proposals, what calls for evidence they will ask professionals about to simplify the tax system, to modernize the tax system. And I mean, I haven't read it because I don't know if it hadn't come out sort of 10, 15 minutes ago. I wonder if simplifying, modernizing, going towards digital, one of the things will be, how can we incentivize employers to payroll benefits? I wonder. Yes, I'm a big advocate of payrolling benefits if it's possible within the organization, recognizing that it's not always possible. It's like automation. Automation is great, but it's not always possible in all organizations. So you should be working towards that. Okay, April 2022, the employer bulletin. Couple of things worth mentioning in there. The old argument, is it a car or is it a van? So the employer thinks it's a car. The employee says, no, it's not a car, it's a van. I should be taxed as if I've got a van, which is a lower taxation than if it was a car. In the employer bulletin, they point to the case law precedent that was set by HMRC versus Coca-Cola, which basically said and there's a link to the employment income manual there, which basically said, well, regardless of how it's used now, what was the reason that the thing was constructed in the first place? What was the purpose for the construction of the vehicle? Was it constructed as a van, or was it constructed as a car? Because that's the most important thing when you say to an employee, well, no, actually, you're going to be taxed as a car, or no, you're going to be taxed as a van. So if that applies, EIM 23100 is the place to go. The employer bulletin, and it's been mentioned before, talked about these GNS messages that come out. Now, GNS, this generic service message with regards to student loans and postgraduate loans, will be where HMRC say, well, we sent you a start notice, the SL1 or the PGL1, or we've sent you a stop notice, but the FPS that you're sending in doesn't correspond. You haven't started or you haven't stopped. So what are you doing? So they'll send a GNS message. So they say, we've sent you a start notice, but it doesn't appear that you've started. Have you lost it? It's a reminder. If you get a GNS message, don't ignore it. That's basically what the employer bulletin was saying. Now, it might be that HMRC sent a start notice for a student loan, and it was implemented in the payroll software, but the reason that there's no student loan deduction appearing on the FPS is because the earnings weren't high enough. So it could be something as simple as that. But just make sure that you or the person that's processing the payroll checks for generic notification service messages or GNS messages. If they get them, don't ignore them. There's a reminder about basis period reform. That's essentially for certain traders, sole traders and partnerships, whatever accounting period they have now, and they're assessed on profits. From 2024, they will be assessed on a tax year basis. So the tax year either runs to the 31st of March, according to this legislation, or the 5th of April. So 2023-24 tax year is really a transition year. So if you've got any clients that haven't got an accounting year end 31st of May or the 5th of April, they need to use this year as a transition year. And what was really interesting, I think, in the employer bulletin was they talked about employers are still sending in data that is creating duplicate employments on our systems. And I think that could be right. I think there might be instances where employers are maybe not sending in the data in the right format on the right date, and HMRC systems are saying, oh, well, that's a different employee than the one we've got. Oh, I'll set up a new employee. There are also occasions where HMRC systems are perhaps not doing things. They're not doing things as we would expect. Is that politically correct? Anyway, they're talking about the important thing with regards not creating a duplicate employment. And they talk about the matching data. So send in your FPS specifically for the first FPS. They're talking about sending data that matches information of a taxpayer that they've already got on their system. And the essential matching data is the name, the full name. So not Bob Harris, Robert Harris. So it's the full name, because that will be the full name on HMRC system, the address, or at least the first 2 lines of the address, the date of birth, the current gender, and the national insurance number if it's available. That is the important matching data. And it shouldn't be, employers should try very hard on the first FPS to get all of that essential matching data. They should try. If they get that matching data, put it in their payroll system, the first FPS will go to HMRC and they will be immediately able to match it to a taxpayer on their system. If they can't immediately match it, so you've got Bob Harris and Robert Harris, and think, Oh no, Bob and Robert are different. Oh, I'll set up a new employment. And it's created a duplicate employment for the same employee. So matching data is an important one. The payroll ID, again, it's been years, but payroll IDs are sometimes not declared correctly. When they're changed, it's not declared correctly that it was this payroll ID. So it's not talking, I'm not talking payroll number. I'm talking about the often hidden in the background payroll ID, which is returned on the FPS. So you've got a current number. If that current number changes for whatever reason, maybe you're changing software provider, maybe there's been a 2P transfer or something like that, and you want to use a different payroll ID, you still use the payroll ID, you still put the payroll ID that you want to use, but you indicate on the FPS that there's a change, and you also indicate on the FPS the previous payroll ID. Now that is something that could cause HMRC systems to say, oh, this is another employee. So you've got one employee, but HMRC systems say, it's a totally different employee. I'll create another record. You've got one record, but the employee will have two, which will be visible to them if they access their personal tax account. Start and leave dates. Oh, yes, start and leave date. I mean, this is quite funny, really. It's that if you send an FPS in and it says somebody started on the 1st of January 2023, but it then transpires that they started on the 10th of January, maybe you misread it, maybe somebody told you incorrectly that they'd started on the 1st. I said, oh, I meant the 10th. What HMRC say is that this is, and it's again, it's part of matching data. What HMRC say about that and a leave date, well, actually, we don't want to know the revised leave date, and we don't need to know the revised start date. Correct it on your systems, but don't tell us. And I'm not totally sure that that means that HMRC systems are fully aligned with the information that employers are holding on their systems, but changes in start dates and changes in leave dates could end up creating a duplicate employment. You've got one employee, they've got two employees. The taxpayer will see two records on their personal tax account. Now, the data items guide, there's a link there to the data items guide. I can't get a direct link to it because it's a Word document, but that takes you to the page where this Word document is. And it lists all of the data items that should be in the FPS, if indeed they're relevant for that pay period. Maybe there's no pay, maybe there's no NIable pay, that kind of thing. All of the data items. Look at the essential matching data, and you'll be able to see there, and it's right at the start, the matching data, and it says must be included. So have a look at that data items guide, look at what must be included, and then right at the bottom in an appendix, so you go through pages and pages of data items. Right at the bottom is common problems. Well, a common problem could be that you've done this, but we're expecting that. So don't do that, because our systems will corrupt the data. So that's good information. So the April Employer Bulletin contains some information. The RTI Data Items Guide contains more information as well. Gender pay gap reporting, mandatory for employers in Great Britain, private sector, in Great Britain with over 250, public sector England with over 250. Gender pay gap reporting, easy, because you're only comparing two, a man and a woman. Ethnicity pay gap reporting, though, at the moment is voluntary. And depending on the makeup of the workforce, you could be looking at the pay for a number of different ethnic groups. So at the moment, it's voluntary. Now, what the Department for Business and Trades, that's a new department. I remember what they used to do. Was it Bays before? Oh, I can't even remember. Anyway, they issued updated guidance for the employers that are choosing to do this voluntarily. they've updated their guidance. What I thought was interesting, so there are links to the guidance. What I thought was interesting is the Labour Party have come out and they have said, if they are the largest party at the next general election, they will make ethnicity pay gap reporting mandatory for large employers. Well, what is the standard definition of a large employer? A large employer is one with over 250 employees on the snapshot date. So I would have a look at that. If you can do it, why not do it? I think I would still have a look at that data and consider, well, what happens if a Labour government get in? Will they make it mandatory? I would at least familiarise myself with it. Oh, let's have a look at legislation. And it's specific, excuse me, legislation specifically. Now we're in the tax year, legislation for the future. So legislation to look out for. Two bits of legislation, or two ways in which legislation can be passed, either by the UK government, and it applies UK wide. If it's UK government legislation, it will mostly apply UK wide, i.e. the 4 nations that make up the UK, or we can look at bills that are submitted by private members. They call them PMB, private members bills. There's different types of private members bills. There's presentation bills, which is meant by the first one with the guy at the flip chart, where essentially the private member, the member of parliament, presents their idea for legislation, but it doesn't have to be actually presented. It can just be vocally. It can be presented just by putting together a piece of legislation as a private member's bill. Or there's the 10-minute ruling bill, where the private member, the member of parliament, will be allowed on a certain number of Fridays, I think it is, in the parliamentary year, to get up in the UK House of Commons or the House of Lords. So it could start in either the House of Lords or the House of Commons, and for 10 minutes they are able to talk about their bill. Well, this is why I want to do it. This is what it will do. Or it could be a ballot bill. And a ballot bill, at the start of every parliamentary year, they put all of the members of parliament's names into a hat, and then they draw them out, and the first 20 get preferential treatment, or they get longer to speak and present their bill. That's why they're called the ballot bill, and it's important that it's the first 20. Now, it doesn't mean to say that the others in the ballot process won't go through, but the top 20 are allowed more time. Because they're allowed more time, there's more chance that their ballot bill will become legislation. Presentation bills, because it only has to be presented in the form of legislation, they get no chance to talk about it. The House of Commons, the Houses of Parliament's website actually says they very rarely become legislation. Nothing about the 10-minute rule, again, that influences legislation. So let's have a look at what the UK government have done in terms of bills. And there's one act that I want to point you to as well, in case it's relevant. The Seafarers Wages Act. Do you remember, was it last year or the year before, that the P&O ferries made redundant a lot of people, and they employed people that were maybe not being paid, agency workers that were maybe not being paid the national minimum wage, and that was a big fiasco. And was it Grant Shapps at the time said, we're going to put in place legislation so that companies like that can't get rid of their staff where they're obliged to pay the national minimum wage, and take on staff where they don't pay the national minimum wage. Well, the Seafarers Wages Act 2023 contains legislation which means that such eligible employers must pay the equivalent of the national minimum wage. It doesn't mention anything about the national living wage in there. It says must pay the equivalent. It's not the exact national minimum wage. There's a link to the government backing and press release. this will be interesting as well. And I think we need to keep an eye on this. The retained EU law. So it was Jacob Rees-Mogg put this forward when he was a minister. And essentially what happens with this bill, if it goes through, if it's enacted and receives royal assent, is that all retained European Union law will cease to exist at the end of 2023. It will effectively drop away. Although the legislation says, well, if you want this one to stay a little bit longer, well, that can stay, but the maximum it can stay is another 3 years, so until 2026. So I would have a look at this legislation and these two links here. All EU-derived legislation will that's retained will be known as assimilated legislation. So it won't be known as EU-derived. Every reference to EU is got rid of. It will be called assimilated directives, an assimilated case law, assimilated legislation. There's a retained EU law dashboard of all of the pieces of EU law which has been derived from the European Union. And if you look at this dashboard, there is just loads and loads and loads of law that we as employers and payroll professionals operate on a daily basis. You think of statutory maternity pay, holiday pay, adoption pay, paternity pay, working time. All of that is derived from the European Union. If that law just drops away, what happens to that? Unless there's something else in place, unless it's retained and put into another way and not called EU, but called this assimilated. But there's an awful lot. There's an awful lot of case law as well. Think about maternity, Alabaster, Michelle Alabaster. That case law precedent was set in the European Union. What happens to that? Will that become assimilated case law and retained, or will it just drop away? So I think that's something to look for. It's gone through all of the House of Commons process, HOL. It's gone through the House of Commons process. It's now in the House of Lords. And I think it's the second reading in the House of Lords. Second committee, third, and then it goes for royal assent. So it's making progress, this. So we need to have a look at that and the implications of that. and this one as well. And have a look at the link there, this number 2 bill, which essentially changes the UK's interpretation of the European GDPR. So we don't call it GDPR anymore, it's UK GDPR. So all references to the European Union have been dropped. So that directive is now the UK GDPR. This Data Protection and Digital Information Bill will make further changes to that. It took us long enough to implement GDPR, to understand what GDPR is. Now we've got to look at changes to what took us ages to understand. Now onto the private members bills, all things that we should be looking out for. And I do keep a list. I'm very, very sad. I do keep a list of all of the private members bills, and whether they're a 10-minute bill, whether they're a presentation bill, or whether they're a ballot bill. And from that, I'm able to take a guess, an uneducated guess probably, of whether or not that will become legislation. And the ones that I don't think will go into legislation. Parliamentary year is extended this year until November, so we won't have a King's speech until November. But these won't, they're at such an early stage in their parliamentary process that there's just no time for them to go through. The first one, I'll just go through. Okay, the first one was a Scottish National Party member of Parliament that basically said, like Northern Ireland, all employment law should be devolved to Scotland. What a nightmare. It's a nightmare with Northern Ireland. What a nightmare if it's devolved. But I'm absolutely, I would stake my life that that won't go through. Employee share ownership, that was essentially, that bill was about extending it so that it wasn't just available to higher paid workers, anybody could get it. Full employment bill. I must admit, I looked at that and thought, well, this is just really strange. It was basically saying the UK government will ensure that everybody who can work has got a job. Miscarriage and leave bill, a lot of talk about that. I think that will come back, but I don't think it will go through as a bill. So statutory leave, possibly pay if somebody suffers a miscarriage. But so I think it will come back as something else. Paternity leave and pay, basically changing what we've already got, making it a little bit easier to access. Parental leave and pay in terms of bereavement, changes to the existing. I don't think that will go through. Worker protection. What was the worker protection? I can't remember what it was. Working time regulations. I can't remember that. I can't remember what that was either. Can't remember where. But the reason I can't remember is because I just look at the parliamentary process and I just think it hasn't got government backing, UK government backing, and I just don't think it's. I just don't think it's going to go through. Maybe I'm wrong. Who am I? These are the ballot bills, though. On the next few on the next couple of pages, the ballot bills and the presentation bills that will make it into legislation, and these are ones that we really should be looking for. The thing that concerns me, as if I should be concerned, really, but I'm thinking about employers that have got to implement these bills, is that all of the bills related to the situation in Great Britain. They're largely to do with things that have been devolved to Northern Ireland, as you'll see on the next slide. Big thing that's been devolved to Northern Ireland is employment law. So Northern Ireland can do what they like, Great Britain can do what they like. Pensions is also devolved. So you've got auto-enrolment or re-enrolment system in Great Britain that's mirrored in Northern Ireland. But it doesn't have, as I understand, it doesn't have to be mirrored. And justice is devolved, and education as well. I could go on for devolution about for ages. But that is the big thing as far as I'm concerned. These either are ballot bills or are presentation bills. Remember that presentation bills don't normally become legislation according to their own website. A couple of presentation bills that we need to look out for here, but they only apply in Great Britain. So does that mean there are further things where Great Britain is going to diverge from Northern Ireland? It looks like it. The first one is this carers leave bill. So if you are a qualifying and eligible carer, the Employment Rights Act will be updated to say, if you meet this criteria, you do this amount of caring for this type of person, you will be entitled to take unpaid leave or leave away from the workplace. So that's a similar thing to parental leave, unpaid parental leave, the 18 weeks up to the child's, gosh, 18th birthday, is it? 4 weeks a year. Time off for union duties, time off for pensions, that kind of thing. So a similar thing there. Got to look for that because it's got UK government backing. It's got UK government backing, and at the moment, the UK government have a majority, quite a majority, and it's likely that that will go through. So look for carers leave, unpaid. So won't particularly affect payroll in terms of a statutory payment. However, if somebody is taking carers leave, human resources might say, oh, can you deduct some of their pay because it's unpaid? Allocation of tips. I've talked about this before, but this is basically saying however a client gives the staff tips, whether or not that being cash or electronic, adding it to the bill, that kind of thing, those tips should be fairly allocated by the employer. So the employer shouldn't be keeping any of those. They should be fairly allocated to the people that the tip was intended for. That has got UK government backing as well. So that will happen. Flexible working. This is rather than currently, you've got to serve a period of time before you can request to work flexibly. This bill, which has also got government backing, will make it a day one right that you will be able to request to work flexibly. It doesn't mean your employer has to grant that request, but you will have the right from day one of employment to say, well, I know I signed a contract, but actually I want to work flexibly. But it doesn't mean that the employer will have to accept it. So that will go through, got UK government backing. This will definitely go through because HMRC are talking about it now, and they're anticipating it will be from April 2025. And this is the statutory right to time away from the workplace, so that's your leave, and paid leave where the child, qualifying child, and it's under, I can't remember, under a certain number of months old, is receiving neonatal care. So might have just been born, and then they go into neonatal care. Neonatal care leave and pay kicks in, and maternity is delayed or paternity is delayed. That will happen. That's got UK government backing. Don't know the full details. It's not happening in Northern Ireland. So we'll have neonatal care, a statutory neonatal care pay in Great Britain, but it won't apply in Northern Ireland because the employment law in Northern Ireland is not going to be updated. We've got the Rights Act in Great Britain. They've got the order in Northern Ireland. So that will happen. Protection from redundancy, further protections for pregnant women or those that come back to the workplace after pregnancy. Further protections, that will go through because that's got UK government backing as well. I wonder if this one will go through, and it's all to do with protecting workers from different types of, that's one of the things, from different types of harassment. And what they're doing is amending the Equality Act, and the Equality Act only applies in Great Britain anyway, the discrimination legislation, because Northern Ireland have their own discrimination legislation. The Equality Act was a compilation of all of the Great British discrimination legislation. Northern Ireland haven't done that. Excuse me. This is going to amend the Equality Act, give further protection, a lot to do with harassment, but I cannot see that that has got government backing. Will that go through? Maybe look for an announcement there, but those ones, the top ones, government backing will happen. So therefore will happen in this parliamentary session. If they don't happen in this parliamentary session, possibly what those private members' bills, what will happen with those is rather than falling away at the end of this parliamentary session, they'll be carried over into the next parliamentary session. A few years ago, the Queen, the late Queen, actually got up and said, my government will introduce an employment bill, which never happened. I think that was 2019, just after the general election. My government will introduce an employment bill. Never happened. A lot of the things that were going to be in this employment bill are going to be introduced by private members' bills. So, which is good for the government because they don't have to put together an employment bill. Other people have done it for them. So that's ballot bills, and ballot bills, they say they have a reasonable chance of making legislation because they're the top 20 in the ballot. The ones that don't have a chance rarely make it into legislation. I can't remember the exact wording, but it was sort of like there's little chance of making it into legislation is presentation bills. So these are the bills where the private member, the member of parliament, presents it in some way, just in the form of maybe draft legislation. But these ones will go through. So you've got this extension of auto-enrollment #2 bill. So what that will do is it will implement things that were recommended in 2017. So the enrollment age, so it's the auto or re-enrollment age, will drop from 22 to the age of 18. And the lower qualifying earnings band, the one that used to be aligned with the lower earnings limit, that will be removed. So pension contributions will be payable from £1 rather than when earnings exceed the lower qualifying earnings band. What the legislation says, it will give the Secretary of State powers to do these. So it won't actually say from 2025 this will happen. It will give them powers to be able to do it. It's got government backing, so it will happen. I went to a friend of mine a professional friend at the pension regulator, and I said, well, this just applies in Great Britain. What happens in Northern Ireland? And he did come back to me and said, oh, it's a good point, actually. I'll check with the policy colleagues here. With regards the earnings trigger and the qualifying earnings band, which have to be reviewed annually, they're reviewed by the Department for Work and Pensions, which is a great British institution. Now, what the legislation says there with regards to Northern Ireland is that if the Department for Work and Pensions say it, Northern Ireland have to follow suit. So it's different legislation if the earnings trigger changes and the lower and upper QEBs change, different legislation, but there's Northern Ireland have no option but to follow it. And I wonder if that will happen here. I haven't read the Northern Ireland legislation, which isn't the Pensions Act 2008. Different name. I haven't read it in full detail, but something inside me thinks, I wonder if Northern Ireland will be obliged to follow what happens here. Wait on that. And predictable terms and conditions. This will happen as well, because it's got UK government backing. And all this does really is an agency worker, rather than being as employed or engaged as an agency worker, they will be able to say to their employer or engager, can I have more predictable terms and conditions? So those will go through because they've got UK government backing. And I've got 7 minutes left. I've really chopped the slides down. I hope I've given you enough information. And thankfully, you'll have the slides. P60 and P11D, imminent, coming up. Accounting Excellence Awards. Please recognise that you're excellent. No, you are excellent, but have that recognised by achieving an award. 3 documents. Employer Bulletin. I think the biggest thing from the Employer Bulletin I would get, duplicate employments. There are a lot of duplicate employments around. They're created sometimes spuriously. You think, well, why has HMRC done that? Doesn't make sense. But sometimes, in actual fact, we can look at what we're sending to HMRC and say, in actual fact, yeah, we sent that, and I can understand HMRC systems probably thinking that that's another employee. Don't change the start date. Don't change the leave date. If Bob wants to become Robert, put them off because HMRC doesn't like it. So possibly in that instance, what you'd have to do, you put it down. No, as Robert wants to become Bob, so you start them off as Robert, which is how they should be because that is their full name. Start them off as Robert, and he said, oh, I don't want to appear as Robert. I want to be Bob. Don't change it on the FPS. Perhaps ask software to, well, can he be Robert but known as Bob? Because he probably wants to be called Bob on his payslip. And the legislation, an act and 2 bills, that EU retained law, that's a bit of a worry. And I'm talking to an employment lawyer colleague of mine. He says the most exciting thing that's happened to him in years. Very, very sad. But he said it's going to keep employment lawyers in business for ages and ages and ages. So he's really looking at that. I think we should be concerned about it. And these private members bills as well, the number of private members bills that have got UK government backing, which means that they will happen. Okay, I'm finished. Dry as a bone.
Thanks very much, Ian. Masses of information as ever. So thanks very much for that. We will obviously be sending out the pack, as Ian mentioned. We've been recording the session, so we'll also send out recording. There's a couple of questions, I think. Not many. We'll also send out answers to the questions you put on here. We've got a few minutes, so we'll just run through those. One was around there's a couple around P11Ds actually going right back to the early part of the session, Ian. Just around former employees, and there's just a couple of comments around not realising that former employees don't need to be sent the P11D.
No, they have to request them. That's what the legislation says. They have to request them, but there's nothing to stop the employer giving them if they want to. Nothing to stop the employer.
Okay, and that hasn't changed in terms of paper, sending paper information out recently. No. Okay. The other question we had was around payrolling benefits and whether the dates are the same for payrolling benefits.
Whether what, sorry?
The dates are the same for when you if you're payrolling benefits around P11. Again, it's all around P11Ds, I think, because these are all quite early.
The dates.
Do the statements have to be released by 6th of July?
Well, the good thing about the legislation is it says that what does it say? If you payroll benefits, you must issue a statement to the employee listing the benefits that you payrolled, and I believe it's by the 1st of June, so therefore by the 31st of May. I think it says before the 1st of June. However, if you actually, like we do anyway, so you put your medical benefit and your car benefit and your gym membership and all that kind of thing, you put it on the pay slip, you've effectively provided them with this statement on an ongoing basis. Therefore, if you've done that on an ongoing basis, you don't have to provide them with a separate statement at the end of the year. So therefore, administratively, what HMRC say, it does away with the need for P11Ds. It absolutely does do away with the need for P11Ds. It does away with the need for a statement. It doesn't, this statement by the 1st of June. It doesn't do away with the P11DB. So there's still class 1A national insurance due. And it doesn't do away, doesn't get around the fact that if you're payrolling a car benefit, for example, you often only get the list price and look at the appropriate percentage at the end of the tax year or after the end of the tax year. Well, if you're going to payroll car benefit, you need to know or be able to estimate the annual car benefit at the start of the tax year. There's nothing wrong with, well, this is what I estimate, and then oh, it's changed. Oh, you've got a different car, and changing the car benefit. There's nothing wrong with doing that, because that's what happens with salary. You know, I might start the year on £50,000, but I end the year on £60,000. So somewhere in the year, I've changed, and payroll's had to make an amendment, and it's no different from that. However, processes are not necessarily in place to get that information at the start of the tax year, so that payroll can put that in place. So if employers are going to payroll benefits, which I think they should be at least considering, they need to be looking at their processes.
Okay, great. Thanks, Ian. I think
I'm employed by HMRC here. You must payroll benefits. I'm not saying you must payroll benefits. Consider it before it becomes mandatory.
Great. Thanks, Ian. That was all the questions. So we'll send a little note on those anyway. Thank you very much, everybody. Just one little reminder from last time, just in terms of the payroll health check that we do. I think we mentioned on the last session that we're offering those at a bit of a discount at the moment. We've had quite a few of you contact us about that, but if anybody's interested who hasn't contacted us, then please get in touch with Ian or myself, or have a look at our website to see the details of the payroll health check that we do. So be interested for anybody's get in touch with us about that if they're interested. Great, thank you. Thank you everybody for attending once again. We'll see you again next time.
Yeah, thank you. You know where I am. Any questions, you know where I am.
Thanks everybody.
Take care.
Bye.
Bye. Bye.